What's up everyone, welcome back to another video with the Millennial Finance. Inflation news has continued to dominate headlines and most of it has been pretty negative. Even amongst Malaysians, the main topic that voters were concerned about in the latest general election has shifted from 1 MDB to inflation. I'm not gonna lie, inflation levels that has been elevated like it has been right now is definitely not something to be happy about. It has and will continue to hurt the economy until we manage to sort it out. However, if we want to dig real deep to try and find a silver lining from all of this mess, then the answer to that for personal investors could be money market funds. And that will be the topic of today's video. Cha-ching! So what are money market funds? For those of you who don't know, it's kind of like a mutual fund, except it only invests in highly liquid short-term instruments. These tend to be extremely low risk because there's hardly any movement in price at all in the first place. Traditionally, money market funds have had pretty high barriers to entry limited to the rich because initial deposits were set at pretty high levels. In Malaysia though, this is a thing of the past with the introduction of a host of money market fund products from companies like StashAway, Versa and KDI. If you want to invest in any of these platforms, then use our link down below. It supports the channel and in some cases you can get some cool freebies as well. So, with money market funds being available for Malaysians over, a good year, why should I consider it right now? Generally, they've always been a pretty good place for us to store our cash for things like emergency funds. We've done a few videos of the different platforms over the last 1 year, and even personally ourselves, we have left some cash in all of these platforms. Back when we made the first video about Versa, they had an annualized return of 2.46%. Today, they're giving investors a 4% annual return, which is nearly 60% higher compared to back then. They call it a promo that only will last until the 31st of January 2023, but I'm almost certain that this will continue beyond then. In comparison, StashAway Simple is currently giving 3%, which is lower than Versa but still a lot higher than what they used to give. KDI Safe is also giving an effective annual rate of 3.5%, putting them right in the middle of the other two platforms. And that is basically why we're making this video today. The reason that the returns that money market funds give to investors has increased by so much over the last 2 years is due to inflation. Well, indirectly. Because inflation is so high, Bank Negara had to combat this by raising the OPR or the interest rate like we have seen by central banks all over the world. This year alone, Bank Negara has already increased the interest rate multiple times, leading to a 1% total increase. While this stifles the economy and hurts our other investments like stocks and crypto, it also means that money market funds can now give higher returns in line with interest rates. Many of us may look at a 3 to 4% return and laugh it off because we're so used to the stock market returns that we saw in 2020 and 2021, but in times like this, taking the low return, extremely low risk option could be a good choice. Of course, if you're a Putra and you haven't maxed out your ASNB, then go ahead and do that first because that will still give higher returns. If you don't have that option though, then money market funds are the next best thing. Investors in the US are also seeing similar options in the form of treasury bills, which is in a way a loan to the government, so low returns, extremely low risk, and many respected fund managers believe that a 4% risk-free return is too good of an investment to pass up on. Compare this to investing your money into things like, let's say, stocks or crypto. Yes, the returns can be much higher for us, especially over the long run, but in the short term, volatility is just crazy and the risk is a lot higher. Now, I'm not saying that we should completely stop investing in things like stocks because I still am. Over the long run, it still will be our #1 tool to get us to our financial goals quick. Personally, I am still invested and I'm continuing my DCA approach, but I also have put more and more money into money market funds. But how do we decide what kind of cash or what cash we should put into money market funds? So there are some scenarios that I've thought of that we can hold and store our cash in these platforms. The easiest and most clear-cut one is for our emergency funds. They need to be extremely liquid and easily accessible because, as its name implies, it is a fund for emergencies and those can happen at any time. We don't want to put our emergency funds into things like stocks because those are volatile, and when we need the money, we don't want to sell and withdraw if, let's say, the stock price is down. Unfortunately, we can't technically get immediate withdrawals from the platforms that offer money market funds right now, but most of them do promise a 1 to 2 business day withdrawing process, and all of them do not have a lock-in period. For most scenarios, this 1 to 2 day waiting period should be good enough. So let's say we've been watching the Millennial Finance for 2 years now, and we've saved up a 6-month emergency fund because we are responsible. First off, good for you. So let's say we have a 6-month emergency fund. What we can do is we can have 1 to 2 months in our bank account because that is extremely liquid. We can use that cash anytime we want, and the rest in money market funds. This way, even our money that is sitting idly waiting for an emergency that hopefully will never come is at least still earning some interest. Other than this, any savings that we may have for the long term, so let's say a dream holiday, saving up for a down payment on a house, or preparing to get married, things like those, we can also store the cash in money market funds. These are the cases where we don't really need the money right now. It is sort of a long-term goal, but we want to make sure that the cash that we save does not deteriorate in value. Technically, you could put this money to work even harder through lower risk stocks, but personally, especially in the current macroeconomic condition, I would much rather put it into a money market fund. This way, the interest that we earn throughout our saving period can at least help us get to our goal quicker or give us a bit more money when we eventually reach our goal. For example, let's say you want to save up 48,000 ringgit this year for the down payment of a house. So you proceed to save 4,000 ringgit a month. And instead of putting this cash into a piggy bank or under your pillow, you decide that you want to put it into a money market fund like Versa Safe, which gives a 4% annual return. By the time you hit your goal in 12 months time, you would have an extra 1,000 ringgit in interest alone. That is a free fridge to go with your new house. Another scenario for us to put our money here is if we're saving up powder to buy up stocks and crypto at a later time. I know many people are holding on to cash for investing in the future, just waiting for the right time and for the exact bottom of the stock market. I'm doing that to an extent. Of course, like I always say, no one will ever know when the bottom is, but I also do not want to blow all of my capital right now, especially since the economy is not really in a good position. So instead of just holding that cash in your bank account or even your broker, which gives 0% interest, you can store it in a money market fund and earn interest while you wait. That's what I'm doing right now actually. I already have quite a bit invested into the stock market still. Yes, I do wish I cashed out more earlier on, but the fact of the matter is I didn't, so I don't want to put a lot more cash at these prices, so I'm just storing cash in Versa while I wait. In terms of which platform to use to invest in money market funds, I personally don't really have a preference. I guess you can just pick from one of the reputable ones and just choose which ones have the highest returns, which at this point seems to be Versa Safe. Most of mine is currently in KDI Safe just because I put it in previously and I didn't know that Versa was giving such a high return until I did research for this video. And now you know, the videos aren't just for you guys, but it even helps us find out new things. Personally, I'll probably still keep it in KDI Safe, even though it is slightly lower than Versa, but that's purely because eventually I want to move that cash into KDI Invest and it's just easier for me. If you want to sign up for any of these platforms, use our link down below. Anyway, thanks for watching this video to the end guys. Give us a huge thumbs up if you liked it and subscribe to the channel if you haven't already. See you guys in the next one. Peace out.